All right. So I got a question to start this off. And that's for this. I mean, this is the biggest startup crowd that I think I've seen in a long time. Do you really believe that you can build a world changing, massively impacting customer, giant right here in Toronto? Do you really believe it? You believe it? All right. Well, I definitely do. And I'm going to tell you a little bit about how I got here, because I certainly didn't start out there. I started about an hour from here in Hamilton about 30 years ago. And I was this kid that won the Nerd Olympics, right? So you can start and be great at startups having been this like science fair nerd that invented a new way for rockets to take off. So I realized, and it was probably my first ever exposure to that, and it's still relevant today, that if you've got a vision and you have the will, you can get to that podium, whatever it is, whether that's the Nerd Olympics or that's the category that you're attacking as a startup. I'm going to come back to that. So I started building things, and some of these are still pretty relevant today. Superconductor motors at NASA, quantum key generation, network routing based AI. And what I realized is what I liked doing more was building companies. And it all happened because I got a call from a buddy that was my floor don, right, at Queen's University, a guy that said, in his South African accent, which I won't do, hey, Mike, I'd love you to come help me and my brother Elon, we're building this thing. I'm like, what's your brother's name? He's, don't worry, he's a good guy. We're going to build this thing on the internet. I said, well, I've got a job at Microsoft that is going to pay $100,000 when I graduate, which, at that time was about double anything that any of my buddies were getting as mechanical or electrical engineers. And he's like, we can't pay you anything, but it's California, it's sunny, trust me, you're going to love it. So I asked my mentor and good friend and future investor, and he introduced me to my wife, and he's been a super important guy in my life. What would you do? And he said, I would choose the thing that you believe you can work hard at, have fun at, and don't worry about the money. The money will come. So I got on a plane, I went to California, and then I spent the next 10 years there building these 3 companies, all of which had great exits and were fun. I don't really think back to those days though as my big startup learning times. Sure, Zip2 was fun. It was the heyday. DocSpace we sold 7 days before the market peaked in 2000, and what we now talk about is the bubble. Critical Path happened during the years where, it was like nuclear winter for startups, post 2000, post 9/11. Telecom bubble bust, tech bubble bust. And then I decided to come back to Toronto. And I thought, this whole startup thing might be a little overrated. And maybe all the stuff that I did worked because I was in this bubble. Maybe it wouldn't work up here. So I had this conversation over a lunch with someone who's become a very dear friend about the future of books. And not too soon after that, we decided to build this little company called Kobo, which was all about this idea of the future of reading. And I won't tell you the whole long story about Kobo, maybe over a beer, but very quickly we were number 1 or number 2 in almost every market on the planet, 193 or 94 countries, 20 million plus customers. We had an initial exit and then a secondary exit that was just under $1 billion. And in less than 5 years, we got sales approaching $1 billion worldwide, which is pretty awesome. And I learned through that period that there's actually not many companies that have ever done that before. And if I think back, to how we did it, all right here from Toronto. Most of our people were in Liberty Village. There's a ton of stories and a ton of lessons, but probably the one that I kind of come back to, and I'm currently thinking about a lot with League, is this idea of being in it to win it. Startups are hard. Most of the time you're in the suck where things are not working and it's not a lot of fun and you're running out of cash. right? So if you are in it, definitely be in it to win it and understand what the game actually looks like, what the podium looks like. Because if you don't have a sense of what that podium is, and you're doing all this hard work to be the best little ebook company or whatever in Canada, who gives a shit? Those companies all died. I can tell you that with 100% certainty across every single one of those categories, that those companies that aimed too low or not for the actual podium, they all died. Even guys like Sony in the Kobo case, we bought for $1, not the whole company, but their ebook business. They were first, they invested $1 billion. We bought them for $1 because they aimed too low. So we were in it to win it. And that was in an example where we weren't competing with big, dumb, and slow, which is usually who you like to compete with as a startup, with your new technology and your smart team and your agile process. We were competing with Amazon. Jeff Bezos is anything but big, dumb, and slow. Amazon's giant. That Kindle team was about 5 to 10 times the size of ours, depending on when you looked at it. And they were ruthless competitors. And the lesson there is, even when competing against a Goliath, or many Goliaths as the case was with us, there is a way for a David. You just can't be playing David, or can't be playing Goliath's game. You have to be looking for the strategy that gives you edge. In our case, with like no pocketbook, no brand, no customers, that leveraged others, in this case, national booksellers in every country on the planet, to help us be number one or number two everywhere with about 1/100th the capital. So that was that Kobo experience. And meanwhile, I kind of came up for air, and everything had changed here. And recognized that I spent 10 years in the Valley, came back, did Kobo, and when I did Kobo, I was gone most of the year. It was 250 to, I don't know, 400,000 miles a year of traveling, because all those customers in the 193 countries needed visiting, all of our partners. And meanwhile, tons of stuff happened here. There were more exits, accelerators, and incubators. None of this shit existed when I first started. There were conferences, groups like this, angels, when I started, there was like Ken and Frank from Microsoft. There were no angel investors around, right? So like now there's tons. And things like CDL and things like Communitech and Mars and so on, and DMZ, corporate innovation clusters. Honestly, if I had a penny for every innovation event, that is going on these days, I'd be a wealthier guy. So there's absolutely startup fever, and then I thought about doing nothing next, and it didn't last long. And I had this idea of somehow doing the unfinished work, the massive opportunity / build that I didn't get to do at Kobo. And Kobo was pretty big, but there's a lot of stuff that I didn't get to do. And it just so happened by accident that I heard this pitch about the future of medicine from a pharma billionaire and Bill Clinton in LA. And I got thinking about, well, what about healthcare, right? What they were talking about sounded very med tech, Star Trek, and not really applicable to me, who's lived in California and on Ontario. And in both examples, my experience accessing healthcare generally sucked. So who was going to build the future that was consumer-centric, preventative, tech-enabled, always on, and really about me versus the institutions, the hospitals, the network, et cetera. So we started League, and this is where it's going to go really fast, because I know everybody wants to get out of here. And we started with this idea of building a company that was about you, the consumer, first, and empowering you with technology to be healthy every day versus just building a system that fixes you when you're sick. We built an MVP, as you do, and it took about 8 months, and we turned it on, and it absolutely was not working. Everybody knows this feeling, and this idea of the pit of despair, which is what I call the time between launching and really the next 12 to 18 months. If you go bankrupt or get finished, all you ever know is the pit of despair. You forget the fun part. And if you make it out, that's the magic. You get a chance of building a business. And we tried all kinds of things, every Monday. There were no sacred cows. There were no cows. We just kind of shot every process and every attempt at getting a customer that wasn't working, and we kind of just kept going. And one thing started happening is we started to see signal from employers. And this is a lot of text on the slide here that basically said, hey, overnight we realized we'd built like this consumer piece, this health network, this software for providers, this software for employers, and we can move money, we can move appointments and inventory and health information securely. And I was meeting with this CEO of a health insurance company, and he said, this is kind of what my company should look like in, well, if we do it, 100 years, but if you do it, like next year. So have you thought about building this to be kind of like a next-gen health insurance company? It's like, interesting. So a year ago, we went all in. And as a startup founder, this is something you come to learn, that there are times where you can't just try 5 different things. You just have to jump in. You can't spread your chips across every number on the roulette board, right? You have to go all in. And so that's what we did, focusing on employers with this idea of something around the next generation of health insurance. And it was working. And we started to raise money, and everybody said, you're too early. And then the pitch evolved a little bit, and I started using these words that I didn't really believe about, hey, we're building this next generation health insurance company, I think. And so we had offers, which was awesome, right? No matter how many times I've done this, there is that point where you think, this might be it. We might not get funding. And regardless of whether you can fund it yourself thereafter, if no one's willing to jump in, there's a strong signal being sent to you. But we got signal back that, hey, we'd love to back you. And there was a decision to make, and that's do you want to be the fly on the elephant, right? Providing tools to companies like banks and insurance companies, or do you want to become the elephant, that next generation of what those companies should look like? So we decided to become the elephant. We raised a monster round, and then we did what every company that raises a ton of money does, and that is this idea of throw out all the shit you just built and do it again, except in 3 months instead of 12 or 18. And we did that in October, rebranded, new partnerships, new products, an experience and a value prop to the employer that basically says, hey, we're better, and you get more for your money. And good shit start happening, but ignore this stuff, right? Ignore when people say these nice things about you, because I don't know, I filled out a form somewhere and this happened. This is not real. It's not real, right? And there's another one in here, I guess we took it out, of being in Times Square, like leagues in Times Square. My mom loved it, but it's not real. Lines like this from the person of the Globe and Mail that didn't really understand what we were doing, also not real. And what we started doing is actually focusing on growing the business. And that's the hard part, right? Is figuring out ways to grow. There's no exponential curves. There's just a series of like curves and strategies that tap out. So we start going from like taking a long time to get to our first million of contracts to our first $1 million month to $1 million deals. And then took a break and got through the holiday, and now trying to stitch Humpty Dumpty back together again, and get ready for this year, where the goal is to start doing $10 million months. Recognize a year ago we didn't know what the hell this was, and we decided to go all in and thought we had 3 to 6 months left of cash. And today it's a very different picture, right? As humans, we like to think very linearly. Things are not going well. Looks like it's not going to go well. We're going to run out of money, right? Things can happen, and things can go very non-linear, very fast. And we're doing it with the end in mind. If this is a next generation health insurance company, you have to be talking in terms of billions and tens of billions to have any appreciable amount of market share in a $1 trillion market. So with that, I'll leave you with this line that I used earlier about being in the startup game. You have to be in it to win it. And to do that, you need to understand what winning it looks like. What does that end game look like? What does the podium look like? And what are the things you're gonna do, both good and with sharp elbows, to make sure that you get there, and sometimes to make sure that other guys don't. And this can all happen right here in Toronto. I'm doing it. I think you can all do it. So let's get to work. Questions? That was way over 5 minutes. I'm sorry.
Hello. Yeah, I did not know there are 193 countries in the world before you spoke, actually.
Countries, atolls, islands, it's all added up.
That's awesome. So my question is, you have had quite a few successful exits. How do you maintain your own stake in the companies when you go through different round of financing? And how do you negotiate for a bigger amount when you exit? Instead of $200 million, how to make it $300 million? What are the things important?
So, listen, the first question is how do you make sure that you don't get screwed investing with investors and maintain a certain level? To be honest, and this is probably not a good answer for this room, I've never really focused on that too much, and it's probably resulted in me, the guy that went to engineering school versus getting the banker or investor memo. It probably resulted in me making less than I otherwise could have. But I've generally focused on picking the right partner and getting to the podium versus, do I have 22 points out of this or 18? I haven't really focused on that. And in fact, with our most recent round, it was absolutely about being in it to win it and what the right choice was versus what am I going to get. However, I've generally stayed away from anything funky, all kinds of prefs and different structures and exemptions. Like, I don't do any of that stuff. I'd keep it simple. I think most people are doing that these days. And as far as getting the most on your exit, the best answer I could give you, and I think anybody would give you, is generate an auction. You got to get more than a few buyers interested. Otherwise, you're just kind of left negotiating with yourself.
Hello. I don't even know why I'm here. I was just trying to go home and I found pizza. But so one thing that I saw in your presentation was you were trying to take care of the healthcare industry out of the Stone Ages. So I work in the music industry, and I find that that's stuck in the Stone Ages. So trying to find labels, distributors, or artistic ways to innovate technology, everybody has a backslash. So in your example, when you were looking at the insurance industry, was there a secret sauce or other than trial and error that you found worked and actually converted consumers out of the Stone Ages?
So just to be clear, I did not start League to build a health insurance company. I still don't really know what one totally does. And I hope there's no regulators in the room or lawyers. But I didn't. We started with this idea of my experience as a consumer accessing healthcare, getting an appointment, filling out those forms. It sucks. Why do we still do that? It's completely crazy. I learned as we kind of got into it and figured out, wow, the money is, got to follow the money. The money is actually with employers that pay for health insurance or what are called employer-sponsored health plans or health benefits. And it was only then that I started to think, oh, there's a name for this thing that we're trying to make a better version of. It's an insurance company of sorts, or does Uber call themselves a transportation company? It's a next version of that. And it was only through that I realized things like, wait a minute, 70% of small businesses in Canada, in the US it's 70% under 50 employees, actually have no form of health insurance. Because you got to talk to brokers. Brokers don't really like talking to you as a small business because they'd rather play golf. Nobody understands the product. It was only through that I started to realize that there was a real opportunity there. And to be honest, as far as how to get those customers and how to do it efficiently, we're figuring it out on the fly. Like I said earlier, there are no sacred cows. If something's not working, we'll shoot it and try something else all the time. And I think I had it up there, this idea that it's a relentless pursuit of viability. There's no, hey, I raised money and things are awesome. I raised money and trashed everything. and start it again. And we'll probably do that again. We're just talking with our co-founder, Dan, today. He's like, you know that conversational UI that we built? I think we have to change it, which is his way of saying, it's been 3 months. It's time to throw it all out. Any other questions over there?
One more. Last question.
Last one. Okay.
Part of being an entrepreneur.
I don't pivot. I was an evolution.
Yeah, evolution. How hard it is to like explain your early investors and employees that listen, like stuff we were doing before, the natural evolution, because we learn over time, because you're always learning when you're doing a startup. We'll have to like rejig the product, position it in a different way, and then have a different go-to-market strategy. How hard is that to explain it to your initial like early investors and like employees?
Yeah, so listen, one of the biggest parts of what I do is pick people to work with us. And that means people that get paid and work in the office, as well as people that are investors. And the picking of the people is probably the most important way you have to shape culture. And culture for me is not a bunch of nice words that you stick in a HR manual that nobody reads. Culture is the how, not the what or the why, right? The product and your mission and so on, your vision, but it's the how. The how are you going to do things? And so culture is actually critical in both your your investor group as well as your employer group, because the how is really how you compete. And if you have a group that you've brought on that can't handle that we have to evolve like literally tomorrow or in the next hour, you got the wrong group and you haven't picked well. So to me, it's about culture, and it constantly requires feeding and nurturing. And if I look at what I do, it's pick people, make sure money's in the bank, set direction, and tell stories so everybody's as aligned as they could be. Thank you, I'm done.